strong season often brings a rush of calls for roofing contractors, more inspections, more estimates, more crews on the road, and more money moving through the business. A full schedule looks great. Still, busy months often expose bookkeeping and tax problems hiding behind the scenes. A roofing company may have plenty of work coming in while cash stays tight. Invoices go unpaid, receipts disappear, and job profits come in lower than expected. Before storm season picks up, take a closer look at these 7 areas. First, review how you track job cost. You probably know what you paid for shingles and other major materials. Smaller expenses are easier to overlook. Fuel, disposal fees, permits, equipment rentals, extra labor, subcontractors, and return trips all affect the final cost of a job. One extra trip to the supplier may not seem significant. Add several trips, another day of labor, and higher material costs, and your expected profit starts shrinking. After each project, compare your original estimate with what you actually spent. A job-by-job review helps you see where money went and gives you better information for future bids. Next, take a closer look at customer deposits. A large deposit makes your bank balance look strong. Much of that money already has purpose. Materials need to be ordered. Crews and contractors need to be paid. Permits, equipment, and disposal fees may come due before the customer sends a final payment. Problem begins when money from a new job starts covering expenses from an older one. The business stays busy, yet each new project is paying for work already completed. Track deposits by project. Review how much came in, how much has been spent, and which expenses remain. Subcontractor records also need attention before work picks up. Calling someone a subcontractor does not automatically make them one for tax purposes. The working relationship matters, including who controls the schedule, provides the tools, and directs how the work gets done. Once a worker is properly classified as a subcontractor, collect a completed W-9 before the first payment goes out. Very important. Keep accurate payment records throughout the year as well. Waiting until January to search for names, tax identification numbers, and payment total creates stress and raises the risk of error when preparing 1099 forms. Missing receipts create another common problem. Roofing contractors spend money in several places during the week. Supply stores, gas stations, equipment rental companies, restaurants, and online vendors may all appear on the bank statement. Receipts often end up in work trucks, pockets, email boxes, or text messages. A few months later, nobody remembers which project an expense belonged to. A bank statement shows where money was spent, but it does not always explain the business purpose or the related job. Choose one place for every receipt. Upload each one into your bookkeeping software or send it to a dedicated email address. Add the project name while the purchase is fresh in your mind. Unpaid invoices also need regular attention. Finishing a roof does not help your cash flow until the customer pays. Payroll, insurance, fuel, supplier bills, and other expenses keep coming due when an invoice sits unpaid. Review outstanding invoices every week. Follow up soon after a payment becomes late instead of waiting several weeks and hoping the customer remembers. A growing list of unpaid invoices may explain why the company stays busy while the bank balance keeps dropping. Equipment purchases are another area roofing contractors should review. Trailers, ladders, safety equipment, computers, vehicles, and other large purchases may receive different tax treatment from everyday expenses. Keeping the receipt, financing paperwork, purchase agreement, and the date the equipment went into service before buying equipment, mainly for a tax deduction. Review the purchase with your tax professional. A deduction may reduce taxable income, but the business still has to spend the money and manage the payment. The final problem involves estimated tax payments. A strong storm season may increase your company's profit. Higher profit may also increase the amount owed in taxes. Waiting until tax season to review your income leaves little room to prepare. Check your profit during the year and compare it with earlier projections. Set aside tax money as revenue comes in, preferably in a separate account. Regular reviews help you avoid reaching tax season with a large bill and too little cash available to pay it. Storm season brings valuable opportunities for roofing companies. Strong bookkeeping helps your business benefit from the work instead of losing profit through missed expenses, poor records, and cash flow problems. Before the busy season begins, review your job costs, customer deposits, subcontractor records, receipts, unpaid invoices, equipment purchases, and estimated tax payments. I'm Kim Clenny, a licensed CPA in Montgomery, Alabama. Request your free 30-minute business tax and accounting review. We'll review your bookkeeping, taxes, payroll, and financial records so you have a better picture of your roofing company's finances before storm season.